This conference will now be recorded.
So what you should have learned in Principles 1 was a theoretical framework that allowed you to, taught you how to prepare an income statement, a statement of retained earnings, a balance sheet, and a statement of cash flow. That is the main takeaway that you should have received in Principles of Accounting 1. Okay. And so those statements are used by a variety of people, and you should have reviewed generally accepted accounting principles. And then when you did a financial statement, those are some definitions. I think all of this is in Blackboard. You should have at the end of the day been able to prepare an income statement, a statement of retained earnings, and a balance sheet. Because managerial accounting is layered on top of this with additional journal entries and accounts. And so to make sure that we're all at the same level, and plus to review, the first thing that we do is to go through and review financial accounting so we're all up to speed on financial accounting. Okay, so that's the first thing that we do. Okay, so the way that we get to financial accounting is to there's an accounting cycle that starts with analyzing every financial transaction, making journal entries, posting to the ledger, preparing a trial balance, making adjusting entries, a final trial balance, and preparing the financial statement. So you don't just prepare financial statements, you go through step one, analyze every financial transaction, you make journal entries, you post to the ledger, you prepare a trial balance and the financial statements. Managerial accounting just assumes that you can do this, and so it's discussed, but it's assumed you have this background. So I want to spend the first week, making sure that we have this background. One of the things that we did in Principles 1 was to look at the main types of transaction journal entry. Everything starts with a journal entry. And so we had about 6 journal entries that involved cash coming in where cash was debited and another account was credited. Then we had another 5 where cash was paid out and we debited another account and we credited cash. And so what this chart does, and you should have this chart in course content, you're asked to tell what type of transaction it is and then say what you're going to debit and credit. And when we make journal entries, we also have this chart of accounts. The accounts in the journal entries comes from the chart of accounts. So you got to use something with a number. So let's assume we invested $10,000 in a business. And that's always how we start a company, by investing money and getting common stock back. So we would go up here and say that cash is coming in. That's a type 1 transaction where we issued common stock, so we debit cash and we credit common stock. So once we identify the type, it tells us what account we're going to debit and what account we're going to credit, or what type of account. We then come to this chart of accounts and get a number. Cash is 100, common stock is 400. And so if we were going to make that journal entry, we'd say This is a type 1 journal entry. And with this type 1 journal entry, we're going to debit cash. I got me working too hard since this is this review. What are we going to credit? What are we going to credit?
Common stock.
So we're going to credit common stock. And we're going to put the amounts in. This is a journal entry. This is always the first thing we do in accounting. Is there anybody who cannot make journal entries in here? Everybody can make a journal entry. All right, make the second entry where we received cash car rental revenue of $50,000. So we received cash car rental revenue of $50,000. We need a type. Cash is coming in, so it's got to be 1 through 6. Which one of those journal entries is this? Cash is
3.
coming in.
3.
No, not 3. It says
Is it
cash.
2?
It's a
2.
2. So on a 2, we debit cash and we credit revenue or sales. We know cash is 100, was sales 500. So we made that entry. We would debit cash 100. How much? 50,000 was those cash sales. And we're going to credit sales, SALES. And that account number for sales is 500. Our amount was 50,000. So the starting point in getting to those financial statements is to make journal entries. On the journal entry 5 here, we're going to jump down. You purchase supplies paying cash of 1,000. So now cash is not coming in, but it's going out. So which one of these is it going to be? You bought some supplies.
Would it be a purchase asset?
That's purchase of an asset. So that's purchase of an asset. The asset that was purchased was supplies. And so we're going to debit supplies and credit cash. We go in here and we see that the account number for supplies is 130. So for this $1,000 purchase of supplies, our type is 7. So supplies is 130. So we're going to debit supplies. And we're going to credit cash. And that's going to be $1,000. So you see how a journal entry looks. It has both a debit and a credit, and they have to equal. So you got to have 2 accounts at least, and the debits have to equal the credit. So let's do one more.
I have a question.
Yes.
Why is the cash credited this time?
Okay, because you paid cash out. When cash comes
Okay.
in, you debit cash? That's a good question. Whenever cash comes in, we debit cash. Whenever cash is paid out, we credit cash. So if you're running a business, that's what you're doing. Got it?
Yes, sir.
Okay. Another way to look at this is a debit is always you receiving something of value, and a credit is what you gave up. So in any transaction, two things are happening. You're receiving something of value and you're giving up something of value. So in this first one, they got cash, they gave up those stock certificates. In the second transaction, they got cash, they made sales, so good transaction, they gave up some inventory or product and they got sales. In this third transaction, we're getting cash, but we're getting supplies, but we're giving up cash. So we received something of value, supplies. That's the debit. We gave up something, cash. So one more, do number 9. Let's do number 9. So number nine, we don't have any cash, so it's not a 1 through 11. So what is number 9 going to be? We purchase those supplies on account.
Can you repeat what 9 said?
Purchase supplies on account, 8,000. You purchase supplies on account. That's going to be what, a 12. Purchase of an asset utilizing debt. So the asset purchase was supplies. So we know supplies account number is 130, but we created debt. It will be an account payable. So it'd be 301. So in this journal entry, when we buy the supplies for 8,000, we're going to debit supplies again. $8,000. Then we're going to credit, was it 301? 301 accounts payable. $8,000. And we said that was what, a type 12, correct? So the way we always start a problem is you're going to have a set of transactions. You got to go up and identify the type from 1 through 21. And so it's going to be one of those. And that's going to tell you the type of account to debit and credit. Then you go into the chart of accounts and get an account number. And then you put that, then you make the journal entry. So to get to those financial statements that we won't prepare, you got to be able to make the journal entries. Okay, so let's look at another thing that we'll be doing in the course is when we do things like this, we will be using an Excel spreadsheet. Can you see the sheet all total?
Yes, we can see it.
Okay, and of course you should have it in course content. And so we put the journal entries, on the journal entry sheet, debits, credits, type. And we also indicate whether that journal entry is going to go on the statement of cash flow. So for the continuing students, for my continuing students, you'll be doing all of this on problem 1. Then once you make a journal entry, you go to the T accounts. So now we're trying to say, okay, how much cash we got after all of these journal entries? If it's on the debit side in the journal entry, it's on the debit side in the T account. If it's on the credit side in the journal entry, it's on the credit side in the T account. So we post all those transactions. We utilize our little posting references. And then we prepare what? A trial balance. And the trial balance will start off with assets in the same order as that chart of accounts. So the first item on there is going to be cash. This is going to come just like that chart of accounts. So eventually we're going to have sales here. And so when we get ready to do an income statement, we can utilize the accounts from sales on down, just put them over here and get an income statement. Then we do a statement of retained earnings to see how much is left in the business. And somewhere in here will be retained earnings. And everything from retained earnings up goes on the balance sheet. So the Excel spreadsheet has the trial balance. It then has the income statement, statement of retained earnings, has these closing entries because we close out all of the temporary accounts. So dividends will be I put dividends here. So everything from dividends on down, we're going to close out. Okay, so and then we prepare a balance sheet. So once we get a trial balance, we can then get those 3 income statements done. We make the journal entries, okay? Then we post them to the T accounts. Then we prepare the trial balance. And items from sales on down, so everything from sales on down is going to go on the income statement. Everything from retained earnings up is going to go on the balance sheet. So once you get a trial balance, it's easy to knock these out. Then we have the statement of cash flow. And of course, your journal entries tell you what comes in here and where. Then the inventory flow chart. So continuing students, are we ready? The reason that we utilize the spreadsheet is that it's going to add and subtract things for us. So it's just a template. And you get used to that, but it will help with all of the work if you're utilizing the Excel spreadsheet. So on next class period, Hicks and Christopher and Mays will be presenting, and any other continuing students, problem 1. Then for problem 2, no, it's problem 4. That's the new student. You'll be doing problem 4, but you don't have to do that until uh, next Tuesday. Are there any questions by anybody?
I have a question.
Yes.
So is this the course room we're going to be meeting in every class period? Because the one on the syllabus is not the one we're in right now.
This is the one we're going. There's two on the syllabus. There's the section, and I just have section. The morning class is on there, and this class. So there are two
Yeah,
on the syllabus.
yeah, we're in the morning class one right now, rather
I'll,
than the one. Yes.
I'll
Yes,
get
that's
it.
why it's an error for me.
I'll get it clear by next time, I guess.
Thank you.
Okay. Thank you for letting me know.
I have a question too. So you just said for problem 4, the new students will do that next Tuesday. Are the new students all in a group together, like the teams, or you haven't picked the teams yet?
We hadn't picked the teams yet. The way the teams will work will be it'll be a combination of new and continuing students.
Okay.
And so I'm going to ask Hicks and Christopher to work to get the teams together for me for next time. And we'll do
Okay.
it based on the people who are here. So what that will mean will be a continuing student will help you, because you'll be on their team rather than just all new students trying to work it out by themselves. Got it?
Yeah. Thank you.
Yeah, so that will probably be a better thing. So Hicks,
Definitely.
let's see, Christopher, are you there? Maybe I go. Christopher Wallace, are you there?
Yes, sir.
So I want you and Hicks and Mays to work on getting the teams created. How many people do we have today? We have 10 people, and it's supposed to be 4 per team. Uh,
Okay. You want that done by Thursday?
yeah,
Okay.
so that they'll have someone to lean on in terms of doing that. So I have this reversed in terms. I'll look at that and see. Uh, I guess it really doesn't matter what number I use since I can use the same number since the classes meet at different times. So I'll figure that out some kind of way and try to give you a final thing on that. But what happens is the morning class is '02, and then this afternoon class is '01. So and maybe I got confused on it because of that. So I apologize for that, but we'll work through that. Are there any other questions before I put you all to work? Let me see one thing. Let's see. Okay, so we now have breakout rooms, okay? And right now, facing Jackson, Prince, Mann, and Weathers in one, and Blake, Hicks, Mays, Brown, and Christopher are in two. And so, what we're going to do, we're going to begin to turn to the problem. Let's see, I have everybody. Let's see. Let me see if I can move. Okay, now I think I have. Does everyone see the problems that they're working on? Because we're going to begin to talk about the journal entries, okay? So, in course content is study problem 1, which is room 2, instead of problem 4, which is room 1. So pull those problems up, and we're going to begin to look at the journal entries in room 1. And then we're going to begin to look at the overall problem in room 2. So let me see if I can start these breakouts. 4 seconds.